Hi, this is Eric Gross with the Eric Gross Group in Cincinnati, Ohio. My wife and I are licensed realtors, and we run a team up here working with retail buyers and investors as well. We've been doing these market updates for a little bit over a year now. Once we started to see the market shift with interest rate increases, and it's to help investors and retail buyers and sellers to know what's going on in the market. So we actually break down what we're seeing year over year. So this March of 2023 compared to March of 2022. So I have some numbers that I'm going to go over, kind of discuss, and what we're seeing market-wise. We didn't do a February update. It was a really busy month. There was a lot going on, but it was also kind of cut short, obviously, with a shorter month. What we saw January, February was completely different from what we saw November, December. So once the new year kicked off in January and in February, we saw multiple offers being offered on houses again, buyers being very aggressive, sometimes waiving inspections. Occasionally buyers are doing the appraisal gaps. Inventories remaining super low. Mortgage applications had jumped up through crazy. The past couple weeks, we've actually seen rates go back up. So we got as low to about 6%. We're closer to, again, 7% now. Talking to my loan officers, we're seeing a lot of that demand slow down. We're seeing a lot of people holding off. Mortgage applications have been down consistently over the past 3 weeks. So that's going to be something to keep an eye on. So compared to last year, what we're seeing is our new listings are down. We're at roughly 1,200 new listings, which is about 20% lower than what we saw last year. That is a big deal. That means we're seeing less actually hit the market. One of the big terms I'd say for 2023 is just we've seen less volume. We've seen less houses selling in general. Buyers are still out there looking. There's just not as many listings. There's less sellers. There's more people being timid with what's going on in the market. So less volume would be my phrase for 2023, and I think we're going to continue to see that. Our active listings are up. They're at about 1,155, 56. So kind of expected that. There is, a little bit less movement going on in the market. Homes are sitting a little bit longer. We're seeing more price decreases going on, especially if they're not priced correctly. Our homes sold were around 900. That was actually a 35% decrease compared to last year. That's what I mean by that less volume. There's less going on in the market. Even with less inventory, even with, the demand still being there, we're just seeing less transactions take place. Average days on market, we're up to 4. So last year we were at 1. One of the big things when we're comparing this year to last year, it is skewed a little bit. For 2 years, we were super lucky and had near historical low interest rates. So our interest rates last March at this time were 3%. This is just when the Fed was starting to raise because of inflation. Our market was still bonanza. Everybody was going wild. What we're seeing this year, rates are almost double. Actually, they are. They're 7% is the prime rate right now. And talk to a loan officer to confirm. But that's going to have a huge impact. The Fed sounds like they're almost committed to continuing to do these rate increases to try and control some of the demand. And if that's the case, I think we're going to continue to see this slow down, this weird cog we're in right now. Our average sales price was $250, so we are up, I think, 3 or 4% on that. So we still did appreciate year over year. Again, it's probably just because we didn't see the slowdown in our market till really July last year. Months of inventory are up. We're still at only 1.45 months of inventory, which 6 months is a balanced market. So that's a huge deal. That means we're still way below the level we need to be. List to sales price is still 98%. We've seen that consistently for a couple months. That means sellers are still giving a little bit on price. I think if you compared March to February or March to January, what you would see is that sales price, we actually saw a lot of homes going above the asking price. So that's a little bit skewed compared to what we saw last year. New construction sales were up a little bit, not enough to make as big of a difference. So what do we take from all of this? The market is crazy. It's going to continue to be crazy. Find a really good real estate agent that's local to where you are, that you want to work with, that can keep you up to date on all of this, because stuff is changing weekly. I mean, we update our investors and our retail buyers as often as possible, and it is all over the place. So find somebody that you trust who's going to kind of help you, guide you, tell you what they're seeing in the market. We tell all of our investors what we're seeing on our listings, what we're seeing on the buy side, what we're seeing when we're writing offers, to try and keep them as educated as possible throughout the whole process. So find that local real estate agent, continue to run the numbers conservatively. even with that big bump we saw in January, February, I don't think it's here to stay. I think the Fed's going to try and continue to fight inflation. We're going to continue to see those rates go up. As that happens, I do think it's going to start to slow the market down. So keep an eye on that. Run your numbers conservatively. I'll throw a little bit extra in here. We're licensed in Florida. We actually keep track of the Tampa market as well. Their market is kind of what I'm thinking is going to happen at some point everywhere, which is their inventory last year at this time was 1,500 homes. They're at close to 6,000. If you zoom in on a neighborhood there is so many people looking to list. Now they're a transient state. This tends to happen, and interest rates and a bunch of other stuff has kind of caught them off. But the prices there are coming down. There's so much inventory. I do think it's probably going to start to happen, and just pay attention to your local market. It's always going to be different. So find somebody who's that expert knowledge. I'm Eric Gross with the Eric Gross Group. We will put our contact information down here as well.